Hey, I'm Napoleon.
Hey, I'm Linnea Delano.
The market revolution occurred at the same time as the Industrial Revolution. During this time, there was a drastic change in how manual labor was conducted in the United States. The development made improvements in how goods were processed and fabricated, as well as by a transformation of how labor was organized to process trade goods for consumption. Marketing prompted
Oh my god, this is like a tongue twister.
Marketing prompted the increased industrialization, and increased industrialization was a major component of the market revolution, as a result of the Industrial Revolution. The whole Industrial Revolution was influenced by the need for national mobility. There were increased productions of early roads, waterways, and railroads, and this allowed for more internal production. Americans wanted to provide for themselves, so in a sense, the marketing was prompted by a collective movement towards a brighter future. What happened on the finance side, Luke?
Well, Linnea, to start off the Industrial Revolution, just one individual ran a company. But eventually shareholders and joint stock companies emerged and specific roles of management changed alongside. As the revolution grew and more opportunities presented themselves, there was a demand for more capital. After seeing that industries can result in profit, people started wanting to invest. So banks formed. Well, basically there weren't very many banks before the Industrial Revolution. Besides the Bank of England, like 30 smaller private banks. Before 1750, people usually used gold and copper for major transactions, and they also used copper for minor transactions. By 1800, private banks had increased in number to 70. County banks increased rapidly, doubling from 1775 to 1880. Hey Linnea, speaking of opportunities, how about those new inventions?
Many of the new inventions that were introduced served a more efficient purpose for a task that had already been done. This natural progression was a no-brainer. Of course people would consider a product that had lessened work. The marketing strategy was not complex. The benefits were obvious, and the marketing was simple. For example, John Deere invented a horse-pulled steel plow to replace the oxen-driven wooden plows that farmers had used for centuries past. This allowed for the farmers to soil faster and more cheaply without having to make repairs as often. Hey, what happened during the Napoleonic Wars? I need to know!
During the Napoleonic Wars, a series of major conflicts pitting the French Empire, led by Emperor Napoleon I. The banks came under pressure from panicking customers making cash withdrawals. The government stepped in to restrict withdrawals to just paper notes, no gold. The Banking Act of 1826 restricted the issuing of notes. Many banks had issued their own, and encouraged the formation of joint stock companies. In 1837, new laws gave joint stock companies the ability to acquire limited liability.
I'm freaking out.
And in 1855 and 58, these laws were expanded, with banks and insurance now given limited liability, which was a financial incentive for investment. Banks typically did not invest in the factories and industries, although there were some short-term loans given to industrialists to cover operating expenses. Money from banks helped buy new improved equipment and expand factories overall. How did marketing change after the new inventions?
A new marketing tactic arose when these inventions worked for other people. Until now, muscle power or wind had been the biggest energy source. It was slow, uneconomic, and unreliable. The steam engine was portrayed in a way that completely countered these negativities. The industrial process was sped up considerably with the introduction of the power loom, steam engines, and more. Woo! This was also the era of extreme factory and corporate growth. Companies were focused on bringing the highest possible revenues. Steam engines allowed for them to accomplish this, which was another good marketing point.
Wow!